Hi, I'm Jim Juback, and welcome to this week's Quick Pick video. This week's Quick Pick is Charles Schwab, but Charles Schwab put options. Okay, put options will become more valuable if the stock goes down in price. This has been a lousy year so far for Schwab. The stock is down about 34% year to date as of March 27th. And the reason for that is that Schwab does not do well when interest rates rise. Schwab makes a good amount of its money, in fact, the majority of its money, on the interest rate spread. That people put money into their accounts and let some of it sit idle, and they get paid by Schwab. Not very much, about half a percentage point to sit in the Schwab money sweep accounts. And then Schwab buys treasuries or whatever with those. What happens when rates go up is people say, oh, I don't want to keep my money in that account paying virtually no interest, and I'll put it into something else that pays better. They're not taking it out of Schwab. They're using an alternative in Schwab. And so one of the uncertainties is how, lazy people will be, how many people will sit there and say, oh, I can't be bothered to move it into a higher paying account. If you move it into a higher paying account and Schwab is getting, treasury rates, it closes that gap and Schwab makes less profit. The other problem is that Schwab, like Silicon Valley Bank and a lot of other banks, was putting their money into long-term treasuries. Long-term treasuries were at that point when they were buying them paying 2% or less. Those are now paying around 4%, a little less, 3.68. Which means the price of those has gone down, and Schwab is sitting on a very large amount of unrealized losses in its bond portfolios. All this is making investors kind of nervous about earnings more than the solvency of Schwab. I don't think there's any question that Schwab is going to be able to meet its cash needs, and it can borrow, and it's got credit lines, and it's raising money, and I don't think that's the problem. I don't think you're going to see a run on Schwab that makes the company go out of business. I think what you're looking at is Schwab reporting earnings on the 17th of April. And right now, analysts are saying 94 cents a share. That would be up from 77. There's a lot of question in my mind whether they're going to make that, whether they're going to miss that, and if they don't miss it, whether they're going to do a warning for future quarters because of this problem that I just laid out. So if you wanted to think about putting on a put before the April 17th announcement, I would suggest maybe looking at the put at like 57.5 for May 19th, the put for June 16th at, again, 57.5. The stock right now is trading at 54. So basically, a put gives you the right to sell that stock at 57. If it goes down from 54 to, say, 50, that right gets more valuable. Right now, a contract for 100 options, put options, for the 19th of May is selling over $290. So you need to get enough money, enough of a drop in the stock to do that. But I think that's quite possible. So think about puts. I'll be tracking this in my volatility index if my volatility portfolio, so if I decide to put on the put, it'll show up there, and that's on my paid site. So if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we're doing the next, and it's free to subscribe. It's also free to sign up for my Juback Picks site that has usually about 2-3 posts a day, 3 portfolios, no options. For options, you'll need to go to my subscription site. That's jubackam.com, and you'll find links to all that down below. Thanks for watching.